London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecologically enhanced.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Tuesday, March 30th, 2021, and the consequences of more stimulus, higher yields, and the fallout from that implosion of Archegos. Have we decided that's how we're pronouncing it?
We're going to call it Archegos. It's all
Stay
Greek to me.
tuned, because it will. Yeah, exactly. Well,
I've been waiting to say that, Carol.
I know. Gosh, and you got it out in the first few
Thank you.
seconds. Anyway, we're going to talk about that block trade blow up. We're going to continue talking about it because it's definitely on our minds today. And we're going to be tackling kind of those concerns over higher yields and President Biden getting ready for another massive spending plan.
We're talking COVID, we're talking vaccine, we're talking infrastructure, we're talking recovery, and of course, we are talking markets.
We are indeed. All right, let's get you going. On this Tuesday with a check on the trading day, here is Doug Krisner.
Hey, Carol, I was going to say Archegos, but I guess that would put me in the minority. I give up. I'm telling
Me
you, this has
too.
been so complex. We have a move up in long-term interest rates today, and that is largely the result of the market weighing the consequence of additional fiscal stimulus. You're highlighting President Biden. He will speak tomorrow in Pittsburgh. We're told his infrastructure plan will address clean energy jobs, a fairer tax code. So not a surprise that you're going to see a lift in rates. The 10-year Treasury right now at 1.72%, but we had traded with a yield as high as 177 earlier in the day, and some of that may have been tied to some very positive economic news. Consumer confidence surging in March to the highest level in a year, and the Conference Board also saying that 8.4% of its respondents say they plan to buy a home in the next 6 months. Speaking of which, U.S. home prices surged in the month of January. We're talking about data from S&P CoreLogic Case-Shiller, the national index of property values climbing 11.2%. That's the biggest increase we have seen since about 2006. Right now we have the Dow weaker by 0.4%. And by the way, that is down from a record high. The S&P off 0.5%. Similar decline for the NASDAQ composite. But look at the small caps. Yesterday's big losers, they are recovering today with the Russell 2000 up by more than 1%. I'm Doug Krisner. That is your Bloomberg Business Flash.
You know it's going to change in a day, Doug.
It will.
Or by the end of the day. That's how it works.
More than likely.
All right, Doug Krisner, thank you so much. All right, it's time for the Market Drivers Report. Let's set that business week agenda on this Tuesday. Dave Wilson, stock editor at Bloomberg News. Man, we're almost done with the first quarter, Dave.
Almost. Just one more day to go and a couple of hours of trading today, and we'll be there.
But who's counting?
I am.
Not you.
No.
TikTok. Speaking of TikTok, tell us about the trade today.
Well, I mean, what really jumps out is, you've seen a whole bunch of stocks take hits over the past several days with this Archegos trading. Call it what you will, but it's clear that these stocks have really been beaten up. And today you're seeing a bit of a revival. I mean, you look at the best performers in the S&P 500, and you see Discovery, certainly one of those companies that's been affected by the selling of these blocks of shares. I mean, Discovery, one of their classes anyway, up 4.8% at the moment. So you're seeing Viacom CBS pick up, while the Chinese American depository receipts that took hits pick up. VIP Shop Holding, an online retailer, particularly notable on that score. It's up more than 7% after saying they were going to buy back as much as $500 million of stock. So basically taking advantage of the opportunity. You've seen the banks that have been doing business with this firm sort of rebound a bit, at least the U.S.-based lenders. We've seen Mitsubishi UFJ actually fall 1.6%. They're a Japanese lender that came out and said they're going to take about a $300 million hit on a U.S. client. They didn't name them, but a person familiar with the matter did, and yes, it was Archegos. So put it all together.
Yeah, it's like one of those, let's take a shot in the dark of who it might be, right?
Large block trade, American client.
Sounds like a name that nobody can pronounce.
Losses started on Friday, which is when all these blocks that were tied into Archegos were being sold. Yeah.
So, Dave, is the fallout going to continue this week? I thought it would kind of stop today.
Well, it pretty much has. I mean, in the sense that, it's very company specific now. I mean, Mitsubishi UFJ is sort of the exception to the rule. I mean, Credit Suisse is taking a bit of a hit as well in U.S. trading. But, most of these stocks that were kind of embroiled in the selling, like I said, they're showing a little bit of life. I mean, clearly nothing close to making back the losses that they suffered over the past several days. But at least, the ship has been righted, so to speak.
Just like the one in the Suez Canal.
Indeed.
Yeah, and looking at, what about these higher yields? I know Doug broke down some of that for us today. We're definitely off some of the higher levels we saw this morning, but that is definitely top of mind for investors. And I do think, Dave, that what we get in that monthly jobs report come Friday, might, ignite some of the concerns that investors have about yields and inflation picking up.
Right, the whole idea of whether the Federal Reserve is going to end up behind the curve when it comes to inflation.
Which Jay Powell has said, I'm okay about that if it means we get the labor market back.
Yeah, he's okay with it. I'm not so sure a whole lot of investors are okay with it. What jumps out in terms of interest rates today, if you look at the 11 main industry groups in the S&P 500, there are only 3 of them higher at this point. And the biggest gain belongs to financial companies. And let's face it, higher yields. I mean, to the extent that yield gaps are widening, that means these banks and other financial companies have a chance to earn a bit more money on their loans and investments. On the other side of the coin, worst performer, utilities. Again, rate sensitive, and it's understandable that higher yields would cause that group a bit of market pain here.
Hey, Dave, we're talking infrastructure just a little bit later in the show. President Biden expected to unveil his infrastructure program on Wednesday in Pittsburgh. What should we be watching for? Is there any chance that a speech like this moves markets, or is it just so difficult for him to get something through Washington that nothing really happens?
Like, do we watch Caterpillar? Do we watch, who do we watch? The cement makers? Like, who do we,
Yeah, I mean, I'm almost tempted to say, companies like Vulcan Materials, Martin Marietta Materials. I mean, because they're in the actual provision of the construction materials. So that's about as basic as it gets. But I suppose the real question is going to be, how much detail are we going to have about the plans, and what are the areas he's going to focus on? That may really dictate what kind of market reaction there is. And this has been anticipated for some time now. You've had this $3 trillion number or whatever being batted around. So the real question is, what at this point isn't already in the prices of these stocks that might cause some rethinking once we get the specifics of the proposals.
All right, Dave, thank you so much. Bloomberg Stocks columnist Dave Wilson, he's going to be back a little bit later on with his chart and stock of the day. Want to do the bite of the day?
Let's do the Business Week Bite of the Day. It's one number that tells us a lot. Brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
How do you like this one? Today's number's 5.
An easy one.
Nice and easy. Individual investors had an impact 5 times the size of their estimated assets in the second quarter of 2020. This is according to recent research from the Swiss Finance Institute. They added 1% to the aggregate stock market valuation in that period, 20% to the value of small cap shares, which we know have really been moving. Traders on the Robinhood app, Tim, accounted for 10% of the variation stock returns. 10% of the variation stock returns. That's significant.
It used to be referred to as a small army of day traders, right? Now it's more like an army of retail investors.
Is it a mid-size,
It
mid-cap
seems to be.
sized army?
Here's the question. Does the interest continue? In a market that just goes one way.
What happens to when everybody's back at work? Like, I know I've been talking to people who are working from home, and that's where they're able to do it more easily. Can you do that in the office?
I don't know. You're probably not supposed to be trading stocks at the office.
Note to self. Look over your shoulders if you're at the office doing this. Coming up, we've got 2 of our most read stories. Has to do with Archegos.
You got
how
it.
we're saying it?
I mean, that's how we're saying it today.
All right, today. First up, the Tiger King and his cub. Our Max Abelson caught up with Julian Robertson, the Tiger King. Had a conversation. Love this.
88 years old. Max talks to him, talks all about his relationship with the man who's in the spotlight right now.
Totally.
And some surprising comments, I think. You're not going to want to miss it.
No, absolutely. Then we're going to also talk about what was really going on inside Wall Street's corridors of power last week as this was unfolding. We've got the CEO, co-founder of Strand Therapeutics. It's all about messenger RNA. What else can we do with it? And later on, we've got the head of Jack in the Box.
Yeah, the CEO, Darren Harris, joining us live just a little bit later.
All right, let's get you going with a check on your world and national news on this Tuesday. Here is Nancy Lyons. Nancy had to check the calendar, remember what day it was.
I know, it's hard. It blurs all together, doesn't it? Well, it's been another day of witness testimony in the George Floyd murder trial. Eyewitness Donald Williams was asked by prosecutor Matthew Frank why he called police after seeing Officer Derek Chauvin put his knee on Floyd's neck.
At some point, did you make a 911 call?
That is correct. Did call the police on the police.
Right. And why did you do that?
Because I believe I witnessed a murder.
And so you felt a need to call the police?
I felt the need to call the police on the police.
Williams happens to be a trained MMA fighter. Chauvin is charged with second-degree murder, third-degree murder, and second-degree manslaughter. Well, natural and man-made catastrophes in 2020 have pummeled insurers. Bloomberg's Ann Cates reports.
The sector was hit with $89 billion in disaster losses last year, including claims from Hurricanes Laura and Sally, plus a derecho storm in the U.S. It's the fifth costliest year ever and data going back 5 decades. According to the report from Swiss Re, both large and small calamities have been happening more frequently since 1970, with climate change having an impact. In Washington, Ann Cates, Bloomberg Radio.
SpaceX has chalked up another failed landing for Starship. Its prototype Mars rocket, a camera on the rocket, froze today in dense fog in South Texas, obscured the views of the rocket coming apart right before touchdown. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, I'm just going to put this out there. Nancy, thank you so much. This story, my husband keeps saying, do we really care whether it came from a lab or whether it came from a wet market? Don't we just care about kind of getting it under control at this point? Anyway.
Do you think I'm an epidemiologist, Carol? Okay, I'm the one who asked the questions here. It's a really good question.
But I mean, it's the amount of conversations we're having, and I understand that we do, I guess, to some extent need to understand where this came from, but I do feel like at some point we're just going to have to let it go, because we may not really I don't know. This feels a little bit part conspiracy theory. This feels a little bit part like, I don't know, will we ever really know?
Yeah, I think those are all really good points, and I think somebody would push back in a non-political way and say perhaps maybe it's important for us to understand how it got out, of wherever it got out from, whether it was a wet market, whether it was food, whether it was a lab, whether it was an animal in a lab, so we know how to prevent that from happening in the future. That said, I use
Keep
the
the
term
lab locked? Oh, wait. That's only if that's the case.
It's like a terrible horror movie that it's like unspeakable. But I really do see your point, because the fact is that we're in a pandemic right now. It's killed more than 500,000 Americans, and where it started, where it came from, does not bring back those American lives and doesn't help us get back to normalcy anytime sooner.
I think what's fair is to say if we had maybe known about it sooner, and if there was a case that there was information that wasn't shared globally, that could have maybe helped us get on top of this sooner rather than later, and could have saved some lives. I mean, there's a lot of finger pointing, and we did not have the playbook to how to deal with a pandemic, but nonetheless, you've got the WHO and others trying to figure it all out.
And it's just another example of politicization, I think, happening. We've seen this when it comes to masks and lockdowns and restrictions, and even the COVID vaccine passports and vaccinations.
And it isn't over. By the way, the reason we're talking about it is the WHO, the World Health Organization, is faulting a COVID report for dismissing the lab leak theory. This is what it's all about, saying that I guess it wasn't pursued enough, at least when they were initially doing their thing. Like I said, a lot of finger pointing and concerns. Anyway, you can check out more about this. Just go to Bloomberg.com. We're going to talk more about COVID-19 in just a moment. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We've talked a fair amount about the global shortage of semiconductors. Right now, evidence that that shortage is hurting companies beyond just car makers. The Nikkei reporting overnight that Foxconn is now saying the shortage will hurt 10% of its shipments. And Apple is a very large customer of Foxconn. Apple shares right now weaker by about 1.4%. We have a move higher in long-term interest rates. Possibly one of the factors at work here, the market really mulling what the consequences would likely be of additional fiscal stimulus. We'll hear from President Biden tomorrow on infrastructure. Right now we have a 10-year Treasury at just under 1.72%. Earlier we traded with a high yield of 177. Now, to be fair, the day's economic news very positive. Consumer confidence at the highest level in a year for the month of March. And we also got word that home prices in the month of January surged by 11.2%. In spite of that, though, Dow Industrial Average is weaker by about 0.2%. The S&P down about 0.3%. NASDAQ Comp weaker by about 0.3% as well. We had J.P. Morgan saying today, earlier in the session, that banks, those banks exposed to the implosion of Archegos, may see a total loss in the range of between 5 to 10 billion. But Wells Fargo is saying the bank will see no losses from closing its exposure to Archegos. I'm Doug Prisner. That is your Bloomberg Business Flash.
Archegos. I'm going to just keep practicing it, Doug.
Is that right? Do I have it right?
You always have it right. I'm following your lead. We both are. All right, Doug, thank you so much. So among the virus headlines that we've got on this Tuesday, Google donating $1 million to help New York City get to its goal of 5 million vaccinations by the end of June. Listen, I've seen a vaccine center up close and personal. It is unbelievable just how well it's organized, at least the one that I saw, and just people in and out, first dose, second dose. The quantity, you could just see the amount of people coming in and out.
Yeah, here in New York City, they opened up vaccines to people who are 30 and over starting today. And the chatter online is everybody trying to get appointments. And it seems like a lot of people have been able to get appointments, just anecdotally. So it seems like they are handling demand pretty well here in New York.
Yeah, I would definitely say that. We did hear, though, yesterday vaccines are becoming a race against time as the CDC warns of a COVID surge. Let's get our daily check on COVID. Dr. Jacob Beecraft is a biologist. He's CEO and co-founder of the privately held biopharma company Strand Therapeutics, and he joins us on the phone in Cambridge, Massachusetts. Jake, nice to have you here with Tim and myself. How are you doing?
Hi, Tim and Carol. It's good to be here. I'm doing fantastic. I think that it is a challenging but a rewarding time to be in the biotech sector.
Why so? And tell us specifically about the work that you guys are doing, because you're in this whole world of something that we've all become not quite an expert on, but we know a lot more, and that is messenger RNA.
Yeah, so myself as a scientist, I did my PhD at MIT focused on messenger RNA therapeutics going back to 2013. And really even back then, we were sitting around talking about the potential of what this technology could do. Luckily, some visionary people at DARPA back then, Dan Wattendorf actually, at the DoD's research division, DARPA, chose to start backing companies and research groups like my own to begin researching this mRNA technology as a therapeutic. That funded a lot of Moderna's work. That funded work that ended up going into BioNTech, and that funded the work that ended up ultimately becoming my company, Strand Therapeutics. And so it's a rewarding time really to see, I think, the power of biotech innovation. I think the power of this technology that those of us who are champions of this field have been promising for a long time. And it's rewarding to in a year that has been just absolutely awful. I think it's a silver lining to see just what can happen when private industry, along with the public and public funding, can come together and deploy these therapeutics.
Hey, Jacob, can you talk a little bit about what mRNA does to the human body? Because I think there has been a lot of questions about it, because it's perceived as being a new technology, at least for use in humans, despite the fact that it has been being researched for years.
Absolutely. So the first thing to say is that mRNA is a molecule that our bodies use all the time. So inside of your nucleus is where your genome is kept, and that's all made of DNA. And so on your genome, you have all of these genes, and those genes code for proteins. And protein is really what life is. It's what makes up the substance of what we are, of what every organism is. And in order for the DNA genes to get out and become proteins out in your body, they have to be sent on this information molecule. And that's what messenger RNA is. And so every day your body is turning on genes by creating messenger RNA from the DNA and using those messages to actually actuate themselves. What messenger RNA therapeutics are just creating that same messenger RNA and using it to deliver different sorts of genes that are only temporary, right? This isn't genome modification. This actually never touches any part of your DNA whatsoever. But you can use these instructions, these messenger RNA instructions, to temporarily deliver instructions into the body, and that could be used to create a vaccine, right? That could be used to help your body train up to learn what a virus might look like without actually delivering the virus into the body. And in the broader field of messenger RNA therapeutics, what my company, Strand, has been focused on is furthering that technology for the use in fighting cancer, fighting rare diseases, fighting autoimmune diseases. All of that can be augmented in this much safer platform than genome engineering as well.
So what you're saying is we're not touching the DNA helix or double helix. We're not playing around with that. But what is it? And unfortunately, you'll have to come back and talk some more because this is stuff we love to talk about. But in a minute or so, what is it that we don't know about messenger RNA that maybe puts people still on edge a little bit? And again, just got about 50 seconds.
I think new technology is always can be a little startling to see at first, especially when it's run out fairly fast in the public eye. I wouldn't say that we have a lot left to learn about messenger RNA itself. It's really, I think, right now about getting vaccines in the arms of people to make sure that we're not rolling the dice on, what are the long-term effects of a COVID infection. I think that's a much more kind of serious thing that we need to protect ourselves against by getting these vaccines out and really, continuing to invest in technology like this so we can be protected from future, pandemic outbreaks.
Right, or cancer. And I know that's something we barely scratched the surface. So I hope you'll come back so we can continue this conversation. We've been talking with Dr. Jacob Beecraft. He is CEO and co-founder of Strand Therapeutics, with us on the phone in Cambridge, Massachusetts. This whole world, like understanding DNA and our composition to use our body to fight viruses and problems, this is a big deal.
Yeah, and it's all new to so many people.
Yeah, absolutely. All right, you're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
He's a great fan of Bill Hwang.
He is the Tiger King,
Yeah.
Julian Robertson.
Exactly. He's going to talk about one of his Cubs because our own Max Abelson actually caught up with Julian Robertson to talk about this. It just blew my mind when I read in this morning. That's Max, though, for you.
That's Max. He knows how to talk to everyone.
He does. All right, we're going to bring him in just a moment to talk about that. First up, though, let's get back to your top business stories. Another look at that trading day. Here is Doug Krisner.
Hey, Carol. So we have the OPEC Plus meeting tomorrow, and I guess you could say the market's a little defensive. We were hearing earlier that a panel of OPEC Plus technical experts agreed to revise down the estimates for oil demand for this year. This was after Saudi Arabia suggested the figure looked a little too high. So WTI now in the electronic session down 1.6%. We're trading 60.60. In the equity space, we're seeing a little bit of weakness now. Some of this may have to do with the fact that long-term interest rates are higher today. This as the market weighs the consequence of more fiscal stimulus. We'll hear from President Biden tomorrow on infrastructure. 10-year Treasury right now just under 1.73%. We had some positive economic news earlier. Consumer confidence surged in the month of March to the highest level in more than a year, and home prices surged by 11.2% in the month of January. Looking at a stronger dollar right now with the Bloomberg Dollar Spot Index rising about 0.4%. The Dow weaker by 0.2%, and by the way, that is down from a record. S&P 500 weaker by 0.3%. NASDAQ comp down 0.3% as well, but look at the Russell 2000 today, up 1.5%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much for the update. So among our most read on the Bloomberg today, it's about the Tiger King and his cub. We're talking about legendary hedge fund investor Julian Robertson. He's the king, and the cub is the man behind the block trade blow-up. We're talking about Bill Hwang and his Archegos Capital Management. So the person we all know, Tim, that we wanted to hear from was...
Yeah, the Tiger King.
Julian Robertson. And the person who actually found him and talked with him is Bloomberg News finance reporter Max Abelson. He's with us on the phone in New York City. Max, leave it to you to get to Julian Robertson.
Well, I want to say that any day I get to interview Julian Robertson is a good day, but any day I get to talk with you two is also a good one.
Thanks, Max.
I really mean that. But Julian is more wealthy and powerful and experienced on Wall Street than you two is the only thing I can say.
That's true.
We're easier to get a hold of, too, I bet.
Yes, that's true. That's true. Look, I mean, I called him and I said, would you mind if I flipped on, the tape recorder and can we talk about this? I know it's unpleasant. And he said, yeah, take it away. I did not expect a kind of full-throated defense of Bill Hwang, and when I say defense, what I really mean is that just time and again, when I pressed Julian on, these monstrously vast losses, just over and over again, he said, look, we've all seen hard times, and I don't know what went wrong, but Bill's a decent guy, and I hope he bounces back. And honestly, he even said that he would still invest with Bill, even now. So, it's just, I don't know if you call that loyalty or you call it faith, but Julian Robertson, this famed hedge fund billionaire, really sort of staying close to his protege.
Yeah, Max, that really stuck out to me about your piece, and one other part did as well, saying repeatedly that this could probably happen to anyone.
Look, I as a journalist, you need to be open to whatever people are saying to you, and you have to let, a subject, as you both know, as interviewers, you have to let people take the microphone once you offer it to them. But, also as a good objective journalist, you can't sort of, you can't just sort of let people talk without pressing them. So I was really clear to him. I said to him, look, this isn't just something that happened to Bill Hwang. He had a role in this. he used leverage to get himself into what we now know is a remarkable amount of trouble. And his direct answer when I asked about that was like, well, look, he's actually a marvelous person. And he made it sound like a Greek tragedy. He said it's tragic that this thing happened. He was really, he described it almost on a personal scale, whereas, as financial reporters, I think we understand it as, as something much vaster, as something that's shaking markets and something that's shaking banks and something that is still playing out even as the three of us speak.
Max, as I was reading through the Q&A that you had back and forth with Julian Robertson, I wondered, and you talked to big names on Wall Street all the time about very difficult subjects. Was there any question that you felt a little uncomfortable asking or pushing on?
Yes, I felt uncomfortable about the whole thing. I mean, that's how you know that it's potentially a good interview when, I felt really awkward. I have a job as a Bloomberg News reporter to press him on, the facts of what's happened here. And what we know is that, for example, Wang, had to pay like $60 million, less than a decade ago for insider trading. He had to get the SEC to lift a ban. I think that was basically like 1 year ago. And Julian did not want to talk about that. And Julian Robertson is besides the fact that he's a powerful man, he's also like a pretty nice man. I enjoy talking to him, so I felt awkward about it, but it's our job, and so I had to ask him about it. And like I said, it's his attitude. He was basically like, well, we've all seen trouble. And actually, I will tell you this: I didn't include this in the write-up, but I feel comfortable telling you this because it was on the record. At one point I said to him, but Julian, like, you've never had to pay $60 million in like criminal and civil fines for insider trading, like that, but Bill did. And I'm telling you, like, he just kept talking about Bill's decency. And I think when I raised that was around the time he said, I actually emailed him and said, I just want you to know, how sorry I am. That's what he said. He said, this could have happened to anyone. So, I guess
that's what Bill Wang said to him. That's what Bill Wang said to.
Pardon me. It's what Julian said to Bill.
Yeah.
This could have happened to anyone. I'm really sorry. And Bill wrote back and said, you're wonderful to come to my corner. That's according to Julian. I didn't see those emails, but Julian told me that Julian said to Bill, this could have happened to anyone. And the thought that went through my head at that moment, Carol, was like, if I ever get into trouble, like I want my friends to act like that. Like it's so. I guess it's menschy. It's
really
kind.
having your back.
Yeah.
Careful with the margin.
Say that again?
Careful with the leverage, Max.
No, I said somebody who really has your back.
Someone who has your back, and I appreciate Tim warning me to keep my leverage down. I promise.
I'm not giving financial advice.
I'm just going to say, too, that they recently caught up in the Hamptons. We're running out of time, but folks can go to Bloomberg.com to read more on it. Max, you are amazing. Max Abelson, Bloomberg News finance reporter. Max Abelson on the phone in New York.
Let's go to Washington, D.C. for a check of world and national news with Nancy Lyons. Hey, Nance.
Hey there, Tim. Jurors in the George Floyd murder trial have been hearing eyewitness testimony from bystanders who watched as Floyd was pinned under the knee of Minneapolis police officer Derek Chauvin. Donald Williams, who has a martial arts and MMA fighting background, told the court he saw Floyd's condition deteriorate over more than 9 minutes.
You could see that he was going through tremendous pain, and you could see it in his face from the grunting. You can see his eyes slowly, rolling back in his head, and him having his mouth open.
Williams says he called police because he felt he'd seen a murder. Chauvin's attorneys have said their client was doing what he was trained to do. President Biden is out with his first slate of nominees to serve on federal courts and for the Superior Court of the District of Columbia. The list released by the White House includes Black, Muslim, and Asian American Pacific Islander candidates, among the 9 women and 2 men. Biden calls it a trailblazing slate of nominees. The White House says the nominees reflect Biden's belief that the federal courts should reflect the full diversity of the American people. Experts have boarded a colossal container ship that had blocked the Suez Canal for nearly a week before it was dislodged. Everyone is wondering what went wrong to cause the blockage that shook the global shipping industry and clogged one of the world's most vital waterways. A canal pilot says engineers are inspecting the Ever Given for damage and trying to determine why it did run aground. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, like most things around here, we like to put a price tag on things. And
we like numbers, we like data.
We do indeed. We are Bloomberg. And JP Morgan also likes to put numbers on things. And they're out saying that banks roiled by the Archegos capital fallout may see total losses in the range of $5 to $10 billion. $5 billion to $10 billion.
Yeah, losses from trades unwinding related to the fallout will be, quote, very material in relation to lending exposure for a business that is marked to market and holds liquid collateral. That's what analysts wrote in a note. They added that Nomura Holdings indication of potentially losing $2 billion and then also press speculation of a $3 billion to $4 billion loss at Credit Suisse is not an unlikely outcome.
Listen, this is something you and I have talked about, like figuring out really the total cost of this or, putting a number on it. It's tough because there is such, a lack of transparency, the opaque nature of this whole thing. There's a great story in the Bloomberg, and I'll put it on Twitter at Carol Masser, but it really goes through the types of trades. It was swaps, it was other kinds of trades that enabled Bill Wang to basically leverage up, really kind of moved a lot on over to the big banks' balance sheets. And it's just a reminder, we saw this in the financial crisis, sophisticated instruments that all of a sudden, create greater exposure and risk for a lot of parties.
And look, the banks are only one of the potential victims from this.
Yeah.
Other victims, I think, include retail shareholders of companies like Viacom CBS and Discovery.
Like, who do you sue if you're a shareholder of Viacom and say, wait a minute?
I have no idea.
Or do you have any standing?
But look what happened last week. And you see look, and this can happen to stocks. It's a good reminder that this can happen to stocks. But if you're an investor who, thought you were buying into a company that was transforming itself into a streaming service, and then you saw losses like that, what are you thinking right now?
But typically, if you're in a publicly held stock, right, if an activist investor is amassing a position and looking for change, if there's another investor who's got a big, that has widened its exposure. Kathy Ark's been talking, we've been talking a lot about her greater exposure to things. I mean, there is some transparency to it, and it seems like that was missing in a big way here.
I think that's a question we're going to keep asking.
Yeah, exactly. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Overall, we're seeing weakness in the U.S. equity market. Having said that, though, 3 of the 11 industry groups within the S&P 500 are positive, financials being the leader right now, and that is largely the result of a move up in long-term interest rates. 10-year Treasury right now at 1.72%. Market is really weighing the consequences of more fiscal stimulus. Tomorrow, we will hear from President Biden, and we are being told he's going to unveil a plan to spend $2.25 trillion on a jobs and infrastructure package. Also moving higher today, consumer discretionary names and some of the industrials, particularly the airlines. The S&P 500 Airlines Group is up just about 3% right now. And one of the standout performers, American Airlines, better by nearly 4.8% right now. We're seeing the Dow Industrial Average weaker by 0.3%, and that is down from a record high. The S&P 500 off nearly 0.4%. NASDAQ comp down a little more than 0.2%. But we do have many in the small cap space moving to the upside. The Russell 2000 right now with a gain of 1.5%. We've got the OPEC meeting tomorrow. Today, a panel of OPEC Plus technical experts agreed to revise down an estimate for oil demand for this year. That was after Saudi Arabia suggested the figure looked a little too high. WTI right now in the electronic session weaker by 1.8%. We're trading 60.50. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you, Doug Krisner. March is Women's History Month, and Bloomberg Radio is looking back at some of the women who played a vital role in American history. Here with today's installment is Bloomberg's Renita Young.
On this day in women's history in 1911, Ellen Swallow Richards dies. She was the first woman admitted to the Massachusetts Institute of Technology, earning her Bachelor of Science in 1873. 2 years later, Swallow Richards appealed to the Women's Education Association of Boston for their help in establishing a laboratory at MIT available for instructing women in chemistry. So the Women's Laboratory opened in 1876. Swallow Richards became MIT's first female instructor, teaching in chemistry and mineralogy in the women's laboratory until it closed in 1833. Swallow Richards was also a chemist and founder of the home economics movement in the United States. That's today in women's history. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. So it is, without a doubt, the financial story of the week. It will turn out to be one of the stories of the year about the private investment firm that continues to be at the center of one of the biggest margin calls of all time. And a member of our Bloomberg News team that broke the story is Bloomberg News finance reporter Sri Natarajan. He's with us on the phone in New York City, reporting for Business Week, along with Bloomberg Business Week editor Joel Weber. He's on the Access line in Brooklyn. Joel, this is a story that we are continually finding out more and more kind of every hour about it. And one of the angles that Sri is dealing with is kind of what was happening at, some of the big banks like Credit Suisse. Like, you had to wonder last week, what were the phone calls and conversations that were going on among the big Wall Street banks?
Yeah, I think we've just all been in awe of this story. And, we first saw it start to trickle out Friday, and then over the weekend, Bloomberg News was just all over it. And the most surprising part that has come from Sri's latest reporting today that I saw was that the banks were all talking about this time last week. So Sri, kind of take us inside those conversations. Like, how did they begin, and how did they go?
No, Joe, you're absolutely right. For all of us in the outside, the news really started trickling out mid to late Friday, over the weekend, and of course through the first days of this week. But for those who've been dealing with Bill Huang and his family office, they were starting to get worried and alarmed by the middle of the week as some of his big positions were moving in the other direction. And very soon, by the middle of the week, the banks did realize they had a big problem on their hands. The risk department, that a number of Wall Street banks, European banks, and even Japanese banks were starting to get worried. So they all decided to get together on a hastily arranged call that included some of the top lawyers from all of these firms, also included Bill Huang, to find a solution to figure out how to untie and unwind these positions in a tidy manner. from our reporting, we understand that Credit Suisse, in fact, was the one that was pushing for this idea of a standstill agreement, asking everyone to cool down, back off for a little bit, let's see how the price action moves, and look at it again on Monday, because they did not want to see an immediate forced liquidation. Well, they clearly reached no agreement. They were all in it for themselves by Friday. It was clear because they'd all broken rank. And now, as we see the consequence of that action, we see the big U.S. banks, Morgan Stanley, Goldman Sachs, Wells Fargo, appear to have emerged from this largely unscathed, but that is not true for an MUFJ, which overnight told us that their losses could be about $300 million. Nomura, which says it has a $2 billion claim without actually saying what its actual hit could be from this. And Credit Suisse, which has still not provided a figure, but estimates on that are heading into multi-billion dollars. And that sort of starts to explain Credit Suisse's stance on that fateful call last Thursday.
Shri, what could have been a tidier way to unwind this? You said the banks were looking for a tidier way to do this, but how could these losses have been prevented when the stock started moving lower?
No, Tim, you're absolutely right. So we're still trying to piece together that part of the puzzle, but one possibility very well could be, instead of the banks moving to seize collateral and force some sort of liquidation event, perhaps the strategy was wait and see if the stock rebounds. Perhaps the strategy was asking some of the banks who had the potential to demand much more margin to give some sort of margin holiday. It isn't clear what the solution could have been, but what is clear is, for at least some of those participants on the call, the idea that banks would move into the market by Friday and do a rapid fire sale of a number of these positions was going to be the worst case outcome, and that's what they're dealing with now.
So, Shri, what are the big unanswered questions that remain?
Well, in the now, the regulators, investors, and everyone on the outside is trying to make sure, is there more to come? Are we going to see more blocks, chunky stock trades happening? Is there a systemic risk? Is the market largely insulated? But without a doubt, as we move past this into next week and beyond and the weeks and months ahead, the big question that will emerge from the saga, and really the big focus point, will likely be around this concept of unknown hidden leverage. How is it that someone could build such concentrated positions in some fairly prominent names? These are Chinese tech giants, U.S. media conglomerates, and yet no one knows about it. If you're in the cash equity market, if you build a position that is larger than 5%, there has to be regulatory filings. But it appears in this case he was using these swap lines with banks that allowed him to avoid having to make any listing of what these positions would be. So we are not aware of any such disclosure. There's no outside money. So he didn't even have the usual disclosures about the size of the fund that we would get from every other hedge fund.
Right.
But clearly was a big player in the market, and the estimates are gross exposure could have been greater than $50-60 billion. That seems like a worry, and that seems like an area where there will be demands for a lot more transparency.
I just want to know, who's the bankers, or are there bankers on this call that just poured themselves a stiff one because we just heard a drink being poured? Just gonna say. Yeah. Listen, this story is far from over, and I'm sure regulators, we know that they've been reaching out to the bank. So incredible reporting by Shri, part of the team that broke this story and has been on it from the get-go. Shri Natarajan, finance reporter at Bloomberg News, on the phone in New York City, along with Joel Weber, editor at Bloomberg Business Week, on the remote access from Brooklyn, right? It was a banker, right? Pouring a drink?
Yeah, it has to be.
I just can imagine.
Still, all week, Carol, from last Tuesday until today.
But I can imagine the conversations that were going on as this started to unfold, the telephone calls over the weekend to the heads of all these banks and their risk management teams, and like who knew what and how do they unwind it all.
Yeah, and I think the potential regulatory fallout is just beginning, and we're going to continue to see questions there.
You're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Three p.m. on Wall Street, an hour remaining in today's equity session from Bloomberg World Headquarters in New York. I'm Doug Prisner. Right now, looks like the major benchmarks are still negative, but we are off the worst levels of the day. And first, this from the Bloomberg terminal. The Federal Trade Commission is challenging Illumina's proposed acquisition of Grail, which is backed by Jeff Bezos. This news just breaking. We'll unpack it as we continue here on Bloomberg Business Week. We have a move up in long-term interest rates today. Some of this may be tied to the market weighing the consequences of additional fiscal stimulus. We're going to hear from President Biden tomorrow, and we're told that he's going to unveil a plan to spend roughly $2.25 trillion on jobs and infrastructure. Now, to be fair, the day's economic news was positive as well. That would argue for higher long-term rates. Consumer confidence in the month of March surged to the highest level in a year, and we learned also that the U.S. home prices in the month of January skyrocketed by 11.2%. 10-year Treasury right now yielding 1.72%. We do see weakness in the Dow, off from a record high by about 0.2%. The S&P 500 down 0.2% as well. NASDAQ Composite off just 0.1%, and in the small cap space, the Russell 2000 higher by about 1.8%. We'll get the OPEC meeting tomorrow. Today, a panel of OPEC Plus technical experts agreed to revise down the estimate for worldwide oil demand this year. This was after Saudi Arabia suggested that initial figure looked a little too high. WTI now in the electronic session down by 1.8%. We're trading $60.45 the barrel. We're seeing a stronger dollar right now with the Bloomberg Dollar Spot Index rising 0.3%. Gold, this is the spot price, $16.82. That's the Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic from Bloomberg Radio.
And Bloomberg Business Week, it is brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. So, top story in our minds today, Tim, no doubt about it, President Biden's infrastructure plan.
Yeah, Chris Condon is Federal Reserve and U.S. economy reporter for Bloomberg News, joins us on the phone from Virginia. Chris, it's great to have you on the show. When we think about what the Biden administration wants to do with its next phase, right, after this COVID recovery package that was pushed through for $1.9 trillion plan, what is the priority for the president?
Well, Tim, I think there's two overarching motivations here. Number one, they want to bring up the longer run rates of economic growth in the U.S., which have been historically quite disappointing for 10 or 20 years, you might say. Also, very much tied into this is they want to engineer a more equal distribution of the benefits of that growth. Because we do see increasingly over a number of decades a greater concentration of wealth and income in this country at the higher echelons of that distribution. And the Democrats really would like to attack that.
Well, and before we get into politics, Chris, because this is something several, I would say, heads of the Federal Reserve have certainly had on their radar. You have, and listen, there's lots of statistics out there about the gaps in wealth and gaps in income. You lay out a couple of statistics. Can you just kind of remind us of what they are that just kind of sets the scene of where we are and how bad it's got in terms of the inequities, certainly the financial inequities in our society?
Sure. I mean, I would premise that just a little bit by saying that there's all sorts of disputes over various statistics.
Right.
Some would use, one more than. But, if you just look at basic distributions of income and net worth, here's a good example. The net worth of the top 10% of households in 1989, that was 9.4 times as much as the middle fifth. If you divide everybody up by 20 percentage points each, that's 9.4 times as much. That by 2007 grew to 13 times, And by 2017, 17 times, and that's before the pandemic hit. And that, of course, has fallen disproportionately on poor and middle-income people. The rich saw financial assets really crater for a while, but they've bounced back and more since then. So those multiples will probably have grown even more since the onset of the pandemic. And that's a good example, I think. And that really goes back over 40 years. We've seen a deterioration of that kind, both in net worth and in average incomes across the board.
So, Chris, let's now get to the politics of this, because this is going to be very political. Even just the way that Democrats and Republicans talk differently about inequality and inequity, using terms like structural versus not structural. How do Democrats and Republicans come to some sort of solution? And right now, do they even see the same problems out there?
Well, this is a really good question. No, they don't see the same problems. I mean, to a certain extent, yes, they do. First of all, we have to say that in the United States, compared to other developed economies, there is a much greater tolerance of inequality. Americans have in our fabric this idea that if you work harder, you're smarter, you invent something, and you make $1 zillion bucks, good for you. What Americans really have a problem with is an inequality of opportunity. So if a kid is smart, but just can't get educational opportunities, work opportunities, because they come from a poor neighborhood and their schools are crappy, their parents aren't connected, etc. If those things deepen the inequalities, that's something that most Americans have a serious problem with. Now, how do you address it? Economists that I spoke on both sides of the philosophical aisle agree that education and training absolutely deserve more resources and more attention so as to create that more equal set of opportunities.
But it's not just more, right, Chris? It's not just more of it, but the right one that kind of opens the doors to opportunities, right?
Well, this is what makes it such a complex issue. You know, one economist said it's not just a matter of throwing money at it. These things are, you know, if they were easy to solve, they would have been solved decades ago. And there are loads of theories about how we should go about. Just one example, Biden wants to make community colleges tuition free. Conservative economists say, hold on, you're getting it wrong here. You have to incentivize the colleges by tying the assistance to the outcomes. Are these kids getting degrees at community colleges? Are they getting jobs and good jobs? And the ones that do that better should get more assistance at schools, that is. So that's just one example. And then, of course, is the taxation issue. Massive disagreement about this. Conservatives believe that wealth is being demonized in the U.S. And that it's kind of a cheap populist ploy to go after the rich and say they must be taxed more. Liberals will say, look, we've tried to allow corporations and wealthy people to keep more of their income under your theory that this would help the over economy more by investing in job-creating ventures, but it hasn't really quite worked out that way. Let's get them to pay more, a greater share, and invest that in education, infrastructure, which the benefits of which is dispersed more widely, greater health care, which can improve the quality of the labor force. A lot of ideas. So, again, as you said, Carol, huge philosophical differences on this, and we're not likely to see those differences just solved. We're going to see one side push through legislation.
Hey, Chris, just in 15 seconds, is there a chance that Biden can do this with getting any Republican support, unlike what he did with the $1.9 trillion stimulus package, relief package?
I do not believe so. No, not such a large package. If they broke up one piece here or there, like a pure surface transit infrastructure piece, that could get maybe some Republican proposal support, but highly skeptical.
Well, we're going to hear more from the president on all of this starting tomorrow, at least we expect to. Hey, Chris Condon, thank you so much for breaking it down. He is Federal Reserve and U.S. economy reporter at Bloomberg News, joining us on the phone from Virginia. I'm a little bit bummed that this might not go through, especially the infrastructure part.
Yeah, like Chris said, there's agreement on sort of what the problem is, just not on the way to attack it. Let's get a check of world and national news in D.C. with Nancy Lyons. Hey, Nance.
Hey, Tim, you were talking about infrastructure. Officials in the Biden administration are starting the push on that, announcing that work has begun on a new railroad bridge across the Potomac River in Washington. This even though the bills were passed and the pre-planning happened long before the Biden administration arrived.
Transportation Secretary Pete Buttigieg, at a ceremony at the rail station in Arlington, Virginia, spoke of the bill that just passed, including money for Amtrak as well as local transit.
The cuts that these agencies were facing disproportionately harm workers who depend on public transportation, including so many of the workers we have belatedly come to call essential. These funds are providing much-needed assistance that will maintain critical rail service to passengers across the country.
The new bridge will serve passenger trains only, leaving the century-old existing bridge for the freight railroads. In Washington, Irv Chapman, Bloomberg Radio.
SpaceX's latest test of its Starship rocket series has ended in another failure, the fourth for the prototype. CEO Elon Musk confirms the spacecraft crashed during a landing attempt after a clean launch this morning in Texas. Here, the SpaceX commentator announces what happened during a video feed.
Starship 11 is not coming back. Don't wait for the landing. We do appear to have lost all the data from the vehicle.
The latest mishap underscores the challenge facing SpaceX as it seeks to build a spacecraft capable of reaching the moon and Mars. Are you ready for some more football? NFL team owners are increasing the season for the first time in 33 years, approving a 17-game regular season. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Oh, if you all were a fly on the wall, the conversation going on between Tim and one of our producers, Ariel Agami, about how we feel about congestion pricing.
It's very contentious.
Yeah.
Look, okay, so let's lay out the story here.
Let's lay it out.
New York City congestion pricing plan can proceed after nod from the U.S. Drivers going into Midtown Manhattan would have to pay tolls. Fees would help fund city subways, buses, and regional rail. Once again, we can identify the problem and we can agree on the problem. There's serious congestion in New York City, and infrastructure in this city is in dire need of repair.
Totally.
But the solution is the correct solution to have congestion pricing, similar to what the UK has with driving in London.
Yeah, and it's interesting. Again, it would charge, as you said, motorists going into Midtown Manhattan from 60th Street to Battery Park. That is a big chunk of New York City. And if you've ever driven during the day or during rush hour, that's a big chunk of New York City that just gets so congested. It can take you hours just to get across town because it gets so crazy. They're talking about it could generate $15 billion over 4 years for the MTA, the Metropolitan Transportation Authority. New York Governor Andrew Cuomo coming out and praising the decision. But there are a lot of New Yorkers who feel like, well, wait, what does that mean? Can I not? The guy I'm wondering, is there going to be outer roads that you can, just shoot through and uptown?
Yeah.
So that you can kind of bypass this if you're going, because I think about that. We do that. We use the city to kind of shoot uptown to, Westchester and that area.
So if you're coming from New Jersey to get to a different part,
go up the West Side Highway.
Right, and
or
it
the
wouldn't
FDR.
make sense for you to be taxed for that.
Correct. Well, should it?
I don't think that part would make sense.
Because I'm not messing up the traffic necessarily in the inside of New York City.
And I think the idea, too, is that this would be a targeted tax, really aimed at people who can afford to drive in rather than take public transit and then use the money generated to support public transit.
Yeah, exactly. And I also will say, listen, exactly, we could put a lot of money into public transportation. It certainly needs to be done. If you ride the system, I haven't in a year, but...
I was just going to say, it's a difficult conversation to have right now when many people aren't even feeling comfortable riding the subways.
Exactly. We'll see whether it goes forward. I do think about, though, New York is a great walking city, but it's sometimes hard because it gets so crowded and there's a lot of traffic that makes it a little bit dangerous. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
With a little less than 43 minutes to go until the closing bell, the equity market has turned mixed. We have the broader market showing weakness, but the NASDAQ comp pushing higher. We want to get you the latest on the price action as we cross to the Bloomberg Macro Squawk Desk and Bailey Lipschultz. Hey, Bailey.
Hey, good afternoon, Doug. As you said, stocks have climbed back from their lows earlier this morning and are now mixed on the day. The Dow is down 55 points, S&P lower by 5, while the NASDAQ is up 5 points. U.S. 10-year yield is at 1.72%, and small caps are higher by 20 points. 8 of the 11 main S&P sectors are trading lower, led by losses in consumer staples, tech, and utilities, while financials and consumer discretionary led to the upside. Nasdaq Biotechs were little changed. Transports gained 230 points. Semis dropped 5, while the VIX is lower by 5%. Leaders in the Dow, Goldman, Caterpillar, and J.P. Morgan, while Amgen, Merck, and Microsoft were the worst performers. Regarding deal news, Illumina fell the most in 5 months after the FTC challenged its proposed takeout of Grail. Hartford Financial jumped after a report that Chubb is likely to raise its bid in the coming weeks. And EQT is said to near a $5.3 billion deal for Cerba Healthcare. In other news, GameStop rallied again after adding another Amazon executive. Wrapping things up, look for earnings from Chewy and PVH after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Doug?
All right, Bailey, thank you. And ahead of that OPEC meeting tomorrow, crude oil showing weakness, WTI down 1.8% in the electronic session at 60.45. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thank you. In this week's Bloomberg Business Week Small Business Survival Guide, with the COVID-19 vaccine rollout steadily gathering steam and an overwhelming desire to get back to business, Tim, it puts companies in kind of a tough spot, and it's basically, should they force their employees to get vaccinated?
It's a question that Rob Mandelbaum explored, freelance contributor for Bloomberg Business Week. Rob joins us on the phone from Brooklyn. Hey, Rob, great to have you on the show. What did you find in your reporting about to what extent that businesses could actually force their employees to get this? It's really they really can't do it, right?
No, they can. They are legally able to mandate vaccines. It just raises, and that was something that the EEOC has said. But it raises a profound question for an employer if you're thinking that, maybe 30% of your workforce, because polls suggest that 20 to 40% of people don't want the vaccine at this point. So if that's the share of your workforce that you're going to make very unhappy, then you have to sort of think about what the consequences would be of sort of requiring them to get vaccinated. Maybe they're unproductive and very unhappy. Maybe they refuse, and then you have to decide what you're going to do.
Yeah, exactly. And listen, just to take a step back, you actually caught up with the Houston-based lawyer who co-chairs the national healthcare practice of a law firm, Fisher Phillips. So you did a Q&A with him to kind of go through the legal steps that maybe an employer can or cannot take when it comes to an employee and vaccines.
Right.
So tell us a little bit more about the conversation, the back and forth. What did you want to find out?
What did I want to find out? I wanted to find out if two things. Could an employer require a vaccine? That was an easy question. But it raised these other questions. But then if the employer didn't want to require a vaccine, then what were the options? And what were the best ways to go about it? And what I found out was that it's in fact much more complicated at the moment than you would think. You would think that you could go and you could say, well, I'll give some sort of incentive to my workers and get them vaccinated. But in fact, right now there's sort of a weird federal regulatory limbo that makes that a little unclear whether you can actually do that or to what extent you can do that.
Why is that?
This gets even more complicated. It goes back to wellness programs, and a way that wellness programs can conflict with the Americans with Disabilities Act, because the Americans with Disabilities Act entitles employees to sort of shield information about their disability from employers and prevents employers from getting information about an employee's disability and then discriminating based on that. And the idea is that, you know, if you make an incentive so great that it is in fact sort of coercive, you know, that the employee, you know, wants to do it despite the fact that they might have to reveal information about a disability, that creates a problem. And the EEOC had been thinking about that for several years, and had recently sort of concluded that the only way that would work is if they called it a de minimis incentive, you know, something, you know, $25, $50, something like that. That guidance is now on hold, actually, and it could be that OSHA, another branch of the Labor Department, will come out with something different, actually, to sort of encourage employers to encourage employees to get vaccinated.
So then it leaves the question about what employers should actually do to encourage employees to take the vaccine. What did Kevin Troutman tell you?
Well, Kevin Troutman suggested that the first thing that you should really do is sort of provide education and information to clear up misinformation about the vaccine that's sort of percolating out there. And he was very specific. He suggested that an employer get someone from, you know, a local healthcare provider, a doctor, or something like that, to come out and talk about the value of the vaccine, the benefits, whatever risks may be. That people tend to, surveys have suggested that people tend to trust that advice, and this won't come as much as a surprise, more than if it came from, say, an elected official, for example. So that was his first suggestion, and really to sort of make a statement, you know, that management was behind getting vaccinated, and you know, and we're really, you know, should in fact sort of make a point of getting vaccinated themselves.
Listen, it's a good back and forth, especially if you're a small business owner, you're running a business, you have some employees, and you're trying to figure out what to do. I highly recommend that everybody check it out at Bloomberg.com. Check out more stories, though, from the Small Business Survival Guide. We've been doing this throughout the past year, covering the pandemic. You can find all of that at Bloomberg.com. Questions, right?
Yeah, a lot of questions. I think back to years ago before COVID, I was at the doctor, and there was a nurse wearing a mask, and I asked why she wore the mask, and she said, I didn't get the flu shot, so I'm required to wear the mask.
That's interesting. So there were rules. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
We're going to be looking at low vol. How's that for cool?
Yeah, that's cool.
Okay, low
It's also a
volatility.
chance for me to redeem myself because yesterday's Song of the Day embarrassment.
Listen to me talk about embarrassed. Man, we were both bad.
It was really bad. It was really bad.
All right, we've got Dave Wilson and the chart of the day coming your way in just a moment. Right now, though, let's get back to Doug Krisner with a check on the trading day. Hey, Doug.
Talking about that Eric Clapton song again?
How embarrassing was that? Going down.
All right. We've got about 28 minutes now until the closing bell. Let's look at some of the active issues. I want to begin with GE. This stock is up more than 3% right now. It was yesterday the company said it sees a path to high single-digit free cash flow margins by 2023 plus. The FTC is challenging Illumina's proposed acquisition of Grail. Grail is a company that makes non-invasive early detection liquid biopsy test. It can screen for multiple types of cancers in asymptomatic patients at the very early stages. Now, the company is backed by Jeff Bezos. This deal was worth a little more than $7 billion, but the FTC is kind of leaning in. We'll have to see what happens. Shares in Illumina right now down by more than 4%. And Apple being heavily traded. It was the Nikkei that reported overnight Foxconn, one of the big Apple suppliers, saying that the shortage of semiconductors is going to hurt about 10% of its shipments. Apple shares right now down more than 1%. Right now we've got the Dow off 1/10%, similar decline for the S&P 500, but the NASDAQ composite showing a gain of about 1/10%. Russell 2000 higher by 2% today, and a 10-year Treasury yielding 1.71%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Doug, you know whose birthday it is?
I have not a clue. Who?
Eric Clapton.
Eric Clapton.
Really? Wow.
I don't know.
Yeah, let's see if Dave gives us a little gift. Thank you, Doug Krisner. This is Bloomberg.
Thanks, Dave Wilson. Jeez.
I'm just trying to be transparent here.
Here's the
It is
problem.
a hallmark of Bloomberg, after all. And, I feel like I have to uphold that tradition.
Here's the problem. The entire control room can see my screen.
That's true.
So they know. They can call me out.
Knew the song, I just couldn't remember who it was. But truly, it was a reporter here years ago and every time, because he just had this thing about him. Let's go to the chart, because we're talking low vol.
Yeah, so why not low rider? That's what I figured for the song. You know, low volatility, you're talking about stocks that don't move all that much as the S&P 500 bounces around over time. And, well, they've kind of been out of favor for a while now. I mean, you're looking at a group relative to the S&P 500 that has fallen 28% in 18 months, or it did through the beginning of this month. And what we're talking about is just the ratio between the S&P 500 low volatility index, where you look at, a group of stocks that do have the least propensity to move in the index, and then comparing it with the broader S&P 500. But what's happened is we've seen that ratio rebound about 4.5% from that low set on March 1st, and it's gotten some analyst attention. I mean, yesterday I saw 3 different reports mentioning low volatility, and the one that I chose to feature in the chart came from Jonathan Krinsky, who's their chief market technician at Baycrest Partners, and the way he figures it, it's time for a bit of a rebound in these stocks. As he put it, some of the low vol stocks are probably worth a look here. Now, he's not coming out and screaming saying buy the stocks. Nonetheless, given how far they had fallen and the fact that they've started to come back, he figures that maybe there's more to come, and that's the point. And so the chart shows you the ratio, shows you how the low vol index has done over time. It hasn't gotten back to records the way the S&P 500 has lately, but it has recovered from the drop it sustained in the first quarter of last year. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So is the thinking that they're not really typically volatile stocks, but they kind of maybe got caught up in a downswing just by overall market malaise, and so you might want to think about looking at them again, since they aren't typically a stock that kind of gets battered around?
Yeah, and a lot of these stocks kind of fit into other categories that have been in favor lately as well, like value, going for the relatively cheap shares. We've seen a pickup in the past few months in value relative to growth, the faster growing companies. And so the low volatility stocks have benefited from that to some extent. So, the thing is, you can always look at these factors, as they call them, in isolation, whether you're talking about volatility or growth value or anything else. But clearly there is an overlap, and, it's something that's worth noting.
You say Jonathan Krinsky. I think John Krasinski.
I've been watching The Office during lockdown.
I did. He said it. I'm like, right there.
Well, it went from Netflix to, I think, a different streaming service at the end of the year. So
it did,
it's
didn't
tough
it?
to find. Yeah.
Moved around.
Hey, Dave, no Eric Clapton today.
I know. It's his birthday.
Eric Clapton today.
It's his birthday.
It's his birthday. I thought so. What I've been doing, Dave, to prepare for this, I know you can't study for it. You just never know where you're going to go with the song of the day. But I do try to pay attention to what is happening in terms of birthdays, anniversaries.
Where do you go?
Memories. AP.
Oh, okay.
Yeah.
Oh, their birthday list?
Let me suggest that there aren't a whole lot of birthdays or anniversaries that I would observe, except maybe Bruce Springsteen's on September 23rd. You may want to make a note of that.
Noted.
Your calendar, Tim.
Okay.
Do you know his wedding anniversary, too?
Yeah, well, not so much anniversaries either.
Okay.
So, but, we've seen a lot of musicians, unfortunately, pass lately.
I know.
So I try to recognize those. But then again, this is a chart introduction, so if it's relevant to the chart, so much the better.
Bruce is going to be 72.
Yeah, he's getting up there.
And I think...
Yeah, but he
isn't
can
Clapton?
put on a show.
Oh, Clapton's 76.
Yeah. I haven't seen Clapton live, but, Bruce puts on a show.
I haven't seen Bruce live, but I've seen Clapton a few times.
Well, next time he's in Jersey, we all got to go, guys.
Maybe we get Clapton and Bruce
I
together.
think we've talked about this before. Like, we are all going to go.
Yes.
Roadshow?
Okay.
Roadshow?
Yeah, this is happening.
Go to the Stone Pony. Is it Stone Pony? Where is it that he used to play?
Yeah,
in
Stone
Asbury
Pony.
Park, right?
Yeah.
Well, that's one of the places, yeah.
All right. Dave is
Yeah,
who
Dave
we want
says
to go.
that's one.
Yeah, I know.
Okay.
Like, Master, just stop.
I know.
Just stop. Shut up.
Well, you're just lucky the Stone Pony's still open, so there you go.
All right, Dave Wilson. Dave Wilson will be back a little bit later on with his stock of the day.
Let's get a check of world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Hey, Tim. The White House is criticizing a World Health Organization report on the origins of the coronavirus, calling it incomplete. This is Press Secretary Jen Psaki.
It lacks crucial data, information, it lacks access, it lacks transparency. We don't believe that in our review to date that it meets the moment, it meets the impact that this pandemic has had on the global community.
Psaki says U.S. government experts are reviewing the findings that say COVID likely came from animals, not from a lab in China. Critics argue the study is insufficient because Chinese scientists did not grant researchers full access to lab records and data. It's day 2 of the trial of former Minneapolis police officer Derek Chauvin, charged with murder in the death of George Floyd. Today, jurors have heard testimony from bystanders. Darnella Frazier was 17 at the time. She's the one who pulled out her cell phone to record the now viral video showing Chauvin kneeling on Floyd's neck.
When I look at George Floyd, I look at my dad, I look at my brothers, I look at my cousins, my uncles, because they are all black. I have a black father, I have a black brother, I have black friends. And I look at that and I look at how that could have been one of them.
Frazier says she blames herself for not intervening to prevent Floyd's death. Membership at churches and other houses of worship is at its lowest level since the late 1930s. According to a new Gallup report, less than half of Americans, 47%, say they're members of a house of worship. That's down from 70% in the mid-1990s. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. And listen, a couple of stories caught our attention. One, because it says Cathie Wood in there, and secondly, it talks about space.
Yeah, well, they're related because Cathie Wood's space ETF sees vigorous trading on its first day. This one written by Claire Ballantyne. We had her on Quick Take a little earlier today, and she shared some numbers with us. And I got to tell you, I had to keep updating the numbers because there was so much activity happening. In the magnitude of by noon, more than $180 million of shares traded hands.
Wow.
Yeah.
Well, listen, this is, Cathie Wood, she's been on our air. Tim and I have talked with her. We've been covering her here since she began, back in, I think it was, I'm trying to think, 2004?
For ARC.
Yeah.
2014. 2014 was when ARC
7 years
started.
ago.
But she actually doesn't, in terms of volume, doesn't have that many ETFs.
No.
And so it's a big deal when she launches a new one.
Exactly. And what she does is she divides them into verticals, and she's got looking at biopharma and biotech specifically. She's got her innovation. She looks at fintech specifically. They've, very clearly defined verticals. So this is a space exploration and innovation ETF. And so launching it again and just, going into another avenue where we know that there's a lot more momentum. And we certainly have seen that pick up over the last few years, last decade, especially when it comes to private sector money in particular, or I should say publicly held entities, but it's been out of the government in terms of what's going on in space, whether it's satellites or space exploration.
Well, that's the thing. In the term, it's sort of the definitions are up to how how they think about it, right? What they include, it doesn't necessarily have to be a company that brings people into space.
No.
For example, the top two holdings are Trimble Inc. and another 3D printing ETF is another one, and has 8.6 and 6% respectively. So that's not necessarily the way that you'd think about space, right?
Right. Kratos Defense and Security Solutions is another one, L3 Harris Technologies, and JD.com. So anyway, Cathie Wood, again, a space ETF. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
For about the last hour or so, equity markets have really been confined to very narrow ranges, with the exception of the small cap arena. Russell 2000 up about 1.8% right now. The Dow down from a record by about 0.3%. The S&P down a little more than 0.2%. And the NASDAQ comp is essentially flat. A lot of the focus today is what's happening in the bond market. We're moving up in long-term yields, long-term rates. 10-year Treasury just under 172. The market is kind of weighing the consequences of more fiscal stimulus. We're expecting to hear from President Biden tomorrow. He will unveil, we are told, a spending plan worth about $2.25 trillion, targeting jobs and infrastructure. Also want to highlight what's been happening with Apple shares, heavily traded now on the big board. The stock right now is down about 1.2%. The Nikkei overnight reporting that Foxconn, one of Apple's suppliers, indicating that the shortages the company has been feeling with the semiconductor supply chain disruptions that we've been talking about, that will hurt overall shipments for Foxconn to the tune of about 10%. So Apple may be pulled into that or for some extent of it. Right now, if you look at the dollar, Bloomberg Dollar Spot Index moving up about 0.3%. I'm Doug Krisner. That's the Bloomberg Business Flash.
Thank you, Doug Krisner. It's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we're taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's John Tucker.
Among the first things targeted for closure during the pandemic was indoor dining. Towns and cities across the nation scrambled to come up with an alternative that would try to keep restaurant owners and their staff afloat. A solution for many was outdoor dining. In Williamsburg, Brooklyn, husband and wife Kaval and Rhea Graham, owners of Kokomo Restaurant, even stepped it up a notch with outdoor decor that made customers feel like they had been transported to the Caribbean.
Once we got word that outdoor dining was a possibility, we then had to scramble to bring that same experience that we built on the inside to outside.
We wanted people to definitely feel like they were being transported to different islands, and we wanted to bring the Caribbean to them and bring it to Williamsburg.
For them, it worked. They were booked every night. Now, in a crowded city where space on the streets and sidewalks is at a premium, the outdoor dining program has been made permanent. Among the changes in a year like no other. I'm John Tucker, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 9.5 minutes, 9 minutes, 10 minutes left in today's trading session. Let's get to it with Ira Rothberg, co-portfolio manager and managing member of Broadrun Investment Management. That is a sub-advisor to the Hennessy Focus Fund, which, by the way, is up more than 13% so far this year, putting it into the 96th percentile according to our data. And he joins us on the phone from Virginia. Ira, good to have you here on Bloomberg. How are you?
I'm doing well. How are you, Carol?
Doing okay. Why don't you start broad before we kind of dig a little bit into your market, into your fund and its holdings? How do you see this market environment right now?
This is an interesting market environment. There are certainly pockets of exuberance in the market, particularly in high growth and concept companies. It seems like in this low interest rate, low growth environment of the pandemic that investors are looking to find the next Amazon. They're looking to buy lottery tickets. Everybody's looking for the next $1 trillion market cap company. And as a consequence, you see people routinely paying 30, 35 times sales for businesses with negative 20 or negative 30% EBITDA margins. And, at the same time, the market overall is perfectly reasonably valued, with the S&P 500 trading at about 22 times forward earnings and our portfolio trading at a discount, trading at about 17 times forward earnings. where we see even better growth in the market. So, we think it's possible to find really compelling investment opportunities in proven businesses with long growth runways, just not in the hot names or hot sectors that you see talked about on TV every day.
Well, let's talk about some of those, Ira, because I know one of your picks is Restoration Hardware. Why are you seeing opportunity there? Sure.
To understand Restoration Hardware, you really need to understand its chairman and CEO, Gary Friedman, who owns about 30% of the company. And if you rewind the clock about 20 years, Restoration Hardware was a nearly bankrupt company before Gary came in and turned things around. And today, RH is really the leading luxury home furnishings brand in the United States, and we think over time it will become the leading brand globally. They're really climbing the luxury mountain. As I mentioned, 20 years ago, they had a box of laundry detergent on the front of their catalog, and today, if you walk into their New York design gallery, 90,000 square feet, 6 levels, a rooftop restaurant, it's quite a different experience. In 2022, they're going to be expanding into England and into Paris and taking this successful concept globally. And so we think they're in the early innings. It's about a company with about $3 billion of revenue today. We think over time they can eclipse $25 billion of revenue. So very, very exciting concept with a talented management team.
It's a very different company. If you go back, you're absolutely right. Very, very different company. And you do think, obviously, playing into that luxury space, and especially over the last year, we're seeing everybody just kind of ramp up their plans for their home. They're just kind of tapping into something. And so that globally means a lot of growth for them.
Sure. Existing home turnover is very strong right now. Housing demand is very strong, particularly in $1 million plus homes, which is their target market. Their target customer has north of $250,000 household income. The rule of thumb is people spend about 10% of their home's purchase price on furniture. If you're buying a $5 million home, a $2.5 million home, that's a lot of business for Restoration Hardware. And people have been moving out of cities, and there's been a robust second home market in the suburbs and beach locations, and that all has been very good for them. But, I think what's most important here is that they've built this luxury brand, and it's continuing to grow. They're going to invest $105 million and build out really a whole suite of solutions in the Aspen, Colorado market. They'll have an RH guest house, which is a little bit more private than a hotel concept. They'll have their traditional furniture design gallery. They're going to have spas and a restaurant. And, all this makes the brand even more aspirational.
Right.
And that gives them pricing power. So, again, they're in the early innings here.
Love me some English wingback chairs. Just going to say. If you ever walk in one of those galleries, it's just like, can I just move in? Can I just move in? Hey, CarMax is another one that you like. KMX is the ticker. What's your take on there? We've only got about 40 seconds.
Oh, sure.
The stock's up 44%, so it's already had quite a run.
They revolutionized the car buying experience about 25 years ago with the no haggle big box format, and they're about to revolutionize it again with their omni-channel concept, which has been rolled out nationally, and they're starting to put advertising dollars really behind it, where you can buy a car from the comfort of your living room sofa. You can arrange for your trade-in. You can arrange financing, and they're really the only ones that will allow you to do as much or as little of the transaction in store, or online as you'd like. And we think that this is going to afford them tremendous market share gains. There'll be cost efficiencies as well.
Right.
And it trades at a reasonable multiple, about 20 times forward estimate.
So you only have to leave actually to go drive the car, ultimately.
To drive to Restoration Hardware.
Exactly, and pick up one of those English wingback chairs. All right, Ira, thank you so much. Ira Rothberg, he's portfolio manager over at Hennessy Funds on the phone in Virginia. Don't go anywhere. 3.5 minutes left in the trading day. We're going to break down that trade. It's all coming your way right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
$4 p.m. on Wall Street. There you have it. That's the sound of the closing bell for this March 30th, 2021. Among the issues today, the consequence of more fiscal stimulus. We'll hear from President Biden tomorrow. He's expected to unveil a plan to spend around $2.25 trillion on jobs and infrastructure. Not surprising that you're going to see a move up in long-term interest rates. 10-year Treasury last quoted at just under 1.72%. Now, on top of that, arguing for higher rates, the day's economic news was positive. Consumer confidence jumping in March to the highest level in a year, and U.S. home prices in the month of January surging by 11.2%. Dow Industrial Average looks like it's going to gap down from a record high by about 0.3%. Similar decline in the broader market for the S&P 500. NASDAQ comp weaker by just 0.1%. However, Russell 2000 small caps up 1.7% on the day. So we saw relative strength among consumer discretionary, financials, and industrial names, and within the industrials, airlines in particular. We had the S&P 500 airline group up by more than 3% today. As an example, American Airlines shares up by more than 5%. GE shares up about 2.5% on the day. This is after the company said yesterday it sees a path to high single-digit free cash flow margins by 2023 plus. And we have Apple shares showing a little bit of weakness on the session, down about 1.2%. Overnight, the Nikkei reported Foxconn, one of Apple's suppliers, saying the shortage of semiconductors will hurt 10% of its shipments. Day before the OPEC meeting, crude oil gapping down by 1.8% in the regular session, WTI at 60.40 now in electronic trading. Stronger dollar today, and that is the Bloomberg Business Flash.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some moves.
On Bloomberg Radio.
All right, folks, let's dig a little bit deeper into the trade. Of course, Doug giving you those closing numbers on Wall Street. What did it mean for the S&P 500? Kind of an even split here. 245 names in the S&P 500. Higher today, 260 lower. Keep in mind, we are awaiting earnings from Lululemon, BlackBerry, Chewy. And I know Doug giving us a heads up about some stuff too, so we'll be waiting for those numbers. We'll break them as soon as they cross.
Yeah, I've taken a deeper dive into the S&P 500. Only 3 of the industry groups are higher on the day. Consumer discretionary higher by about 0.7%. We can round that up to 0.8%. Financials higher by 0.7%. Industrials higher by 0.4%. But everything else in the red. Consumer staples, the laggard today, down 1.12%. Information technology down just about a percentage point, and utilities down 0.9%.
All right, so let's bring in Bloomberg News global macro strategist Vince Signorella on the phone in Westchester. We haven't had a chance to talk on air about what happened last week, and I know you were talking about it, right? So you think you're like, they didn't like what I had to say? No, we totally like what you said.
You know, everybody was talking on Friday and saying, well, it was what the Fed said about dividends and vaccines, which moved the market on Friday, but that news was out Thursday afternoon. And so now, you know, what I was talking about on Friday were the block trades that went through and size moving the market, and now we know exactly what it was. I mean, I saw it going through, but I didn't know what it was on Friday, and now...
But it was unusual. You knew it was unusual.
It was really unusual because in the middle of the day, you saw a really hard sell-off of about 200 points in the Dow, and it was quick, and that's not humans. That's block trades being executed in a major way. And then, you know, what I surmise happened, and you know, I'm not. It's just a guess, but everyone apparently knew that this had to go through days before because the banks were discussing it. And so after a large chunk of those sell orders went through on the margin calls for Archegos. What probably happened is the same people who sold it went in and bought it because they knew that it was only targeting a small handful of names and that it wasn't really a fundamental sell-off for equities. And I think that's why we saw that amazing close in the last 10 minutes, that surge that took us to just about the highs of the day into the close. And that's the kind of trading you get to see when when major flows are moving markets.
So, Vince, are we done? And I'm asking everyone I can this question, but are we done seeing the fallout from this?
Probably not for those single names. From what I'm hearing on the street is they're still holding some of those orders. They're executing it piecemeal. You just can't get that much size and that much liquidity all at once. It would have absolutely, just crushed those stocks, and obviously would have taken the major averages down with it. So this is kind of a controlled fall. And it's still ongoing, and we don't even know from some of the banks that are involved in this trade, for instance, Credit Suisse and Nomura, have not said how much they've lost. It could be in the billions, as some are suggesting. And they're still probably trying to look for ways to get out of these trades at better levels, frankly.
Yeah, I mean, it's just, and I'm glad for your insight, believe it or not, because I know you talk with traders and you see these things and you understand, you've seen a lot of different market cycles, and so when something is just, it's different than maybe what masses are talking about when it comes to market observations. Vince, we got to run. We got to do a little bit of earnings, but thank you. Bloomberg News Global Macro Strategist Vince Signorella. We do want to do Lululemon. They are out. Fourth quarter adjusted EPS $2.58 a share. That's 9 cents better than what Wall Street was forecasting. Revenue coming in a little bit stronger to $1.7 billion. The estimate was for $1.66 billion. Total comp sales, if you take out the currency, up 20%. That too is a big beat. The street was looking for a number of about 12.9%. Fourth quarter sales, comp sales. That was total comp. This is stores comp. X currency was down 29% versus a decline expected of down 24%. This is brick and mortar versus, of course, digital.
Right, and I'm taking a look at Lululemon stock after hours right now. It's kind of going all over the place, now shooting higher, up about 1.1%.
Yeah, so a little bit higher. I'm just taking a look at what it's doing. It's down about 9% so far here in 2021, but it was up 50% last year. Chewy, these are all what you would call pandemic plays. I think it's safe to say that. Chewy also coming out with its earnings, and let me just go to the numbers here. Chewy, of course, everything and anything we love about our pets. I saw a lot of boxes on the street as I walked my lovely dog Scout throughout the pandemic. Fourth quarter net sales, a little bit of a beat, $2.04 billion versus an estimate of $1.96 billion. Fourth quarter adjusted EBITDA of $60.8 million. Estimate of $0.33 million, so that looks like a big blowaway.
Yeah, Chewy shares surging up more than 4% in the after hours.
All right, so a big pop there as well. All right, let's get to the stock of the day. Here is Dave Wilson. Dave, what do you got for us?
Academy Sports and Outdoors, Carol. It's a retailer of about 260 stores in the southern and midwestern U.S. The company was founded in 1938 as a family business in Texas. Academy was bought by private equity firm KKR in 2011 and taken public last October in a $203 million share sale. The ticker is ASO. Now, Academy didn't catch on with investors at first. The company cut its price for the initial public offering before its completion, and on the share's first day of trading, they were a little changed. Academy did better after that. Its shares more than doubled from the IPO price. They set a record earlier this month, and today they posted their biggest ever gain thanks to a well-received earnings report. Academy's fiscal fourth quarter profit was more than twice analysts' average estimate in the Bloomberg survey. Sales also beat estimates as e-commerce revenue jumped 61%. Now, Academy shares responded with a gain of almost 11%.
Wow, one of the certainly outperformers here, Dave, today.
Yeah, absolutely. No question. And like I say, it's a stock that has finally found its audience after a slow start.
And this year, up almost 30% so far.
Yeah.
Wow. All right, Dave, good stuff. Have a good evening. Bloomberg Stocks columnist Dave Wilson talking about a stock that's found its audience. Chewy shares up more than 4% here in the after hours following their latest quarterly number. Listen, we love our pets, and people are spending on them big time, and it's something you can do very easily online.
And also getting some more numbers from Lululemon. Sees first quarter net revenue $1.1 billion to $1.13 billion, beating estimates that we're seeing it at $986.5 million.
All right, certainly a stock we're going to continue to follow into the Wednesday trade. All right, let's get to world and national news. For that, let's head on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden is giving small businesses 2 more months to apply for federal money to keep paying their employees with the pandemic continuing.
Bigger firms with bank relationships were quick to take advantage of what was called a Paycheck Protection Program. The president took steps previously to help those with fewer than 20 employees.
It is a bipartisan accomplishment. Nearly 90,000 businesses are still in line. There's money left. Many small businesses, particularly Hispanic as well as African-American small businesses, are just out of business because they got bypassed the first time around.
The Small Business Administration, which has already approved 8.7 million applications, will also get an extra month to vet the new ones. In Washington, Irv Chapman, Bloomberg Radio.
Emotional testimony today in the George Floyd murder trial from the woman who recorded the incident on her cell phone. Darnella Frazier was 17 at the time. She tells Special Prosecutor Jerry Blackwell that she's still haunted by what happened.
It's been nights. I stayed up apologizing and apologizing to George Floyd for not doing more and not physically interacting and not saving his life.
Frazier says George Floyd could have been her dad or brothers. The NFL season just got bigger. Team owners have approved 17 games over 18 weeks, while the preseason will now have 3, not 4 games. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, so like this story, because I was thinking about what we talked about with Chris Condon, and we talked with him about President Biden expecting to talk tomorrow about his massive infrastructure plan. But part of what he's looking to do, not dissimilar to what Johnson tried to do years ago, right?
With the Great Society.
Yeah, exactly. And reduce the gap that we're seeing, certainly the inequities that we are seeing in parts of our society. So Americans, this is a story by Dow Jones Wall Street Journal, Americans in their 30s are starting to bridge the wealth gap with prior generations, though Black millennials still lag far behind. This is according to some new research from the Federal Reserve Bank of St. Louis. The Fed banks, the regional banks, they do a lot of studies about their communities, and this is certainly one of them.
Yeah, and in 2019, the net worth of households headed by people who were born in the 1980s, and I'm reading from the Wall Street Journal here, was down about 11% below where researchers expected it to be based on older Americans' wealth at the same age. That, a huge improvement from the 40% gap in 2016.
And listen, what this is about is researchers for a long time, again, we're talking about this Wall Street Journal story, worried that there were things like student debt, we've done the stories, legacy of the financial crisis might result in millennials being a lost generation that would never, ever build wealth on par with their parents, that it would just never happen.
I think what we're starting to see, and we can't forget about student loans.
No.
That's been a big part of it because those monthly payments eat into a lot of what somebody would spend traditionally on housing. And with housing prices going up, it's harder and harder to save up for that down payment and then, of course, for that monthly mortgage. With mortgage rates going down, it's been helpful, but oftentimes we see that manifested in higher home prices. But what we're starting to see is that older millennials are just doing household formation at a later age. And they're buying that starter home. It's not really a starter home for them. It's a more expensive home.
Right, because they have more money to put to work.
Exactly.
What's interesting, a senior researcher who worked on the analysis at the St. Louis Fed's Institute for Economic Equity said those degrees are finally paying off. They're paying down that debt and entering home ownership and milestones older generations were able to reach earlier on, which is what you just talked about, Tim. So we're finally kind of getting to that level, and it's kind of exploding.
It really is. And it'll be interesting to see what happens on the other side of this pandemic. In the meantime, I encourage everybody to check out the story in Dow Jones. It's by Rachel Ensign.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
So among the key stories in markets today, the rally that we had in the small cap arena, Russell 2000 today up about 1.7%. To be fair, the index fell more than 2% yesterday. I guess it's fair to say that the market was kind of grappling with the consequence of more fiscal stimulus. We're expected to hear from, or expecting to hear from President Biden tomorrow. We are told he will unveil a spending plan worth some $2.25 trillion targeting jobs and infrastructure. Now, given that, it's not surprising that you're going to see a move up in long-term interest rates. And indeed, the 10-year Treasury today got up as far as, in yield terms, 1.77%. We dropped back to just under 172 at the end of New York trading. Dow Industrial Average drops from a record high today by about 0.3%. We also had weakness in the broader market. The S&P down about 0.3%. NASDAQ comp drops about 0.1% on the day. Crude oil ahead of that OPEC meeting tomorrow down 1.8% in New York. We've got a stronger dollar. Bloomberg Dollar Spot Index rising 0.3%. And a weaker yen by a mile at 110.35. That's going to make trading in Tokyo very, very interesting in a few hours from now. When we come back in about 15 minutes from now, we'll look at the after the bell earnings from Chewy. I'm Doug Krisner. That's your Bloomberg Business Flash.
Rough.
Bark, bark.
Was that a joke?
Yeah, it kind of was. I know it was a lame one. All right, I'm a lame. All right, we'll come back to you in a little bit, Doug. Thank you so much. Well, shares of Jack in the Box, they're up roughly about 17% this year after a 19% gain last year. The fast food chain recently reported earnings. First quarter comp store sales came in better than analyst estimates. Earnings beat too. So we thought, how great that we're going to have an opportunity to look at the business and the outlook with Darren Harris, CEO of San Diego, California-based Jack in the Box, joining us on the phone on this Tuesday. Darren, so nice to have you here on Bloomberg. How are you?
Doing great. Thank you, Carol.
Well, take us back a year. Were you feeling great at the time in terms of how was your world?
Yeah, it was definitely an interesting time to join a company in the middle of a pandemic.
Right.
Try to get to know your staff and your team and lead them when you haven't even met the whole team in person for months into the pandemic. But, our focus was really how do we, focus on making sure that our employees and our guests were safe. And by enable our ability to do that and focusing on that, we were able to really drive our off-premise business and enable product innovation. And as you just mentioned, led to our best year in 27 years, our best quarter in 27 years.
So how did you do it? How did you ensure that customers are safe? How do you ensure that employees are safe? What are the changes that you're making to your restaurants?
No, definitely. We're making it a touchless environment. We're always looking for, each day making sure our employees' health safety checks are happening. Even during my training, joining the company, I went to go to my first training restaurant to go through training as any employee would. And we shut the restaurant down because we had one employee who was quarantined. And so, being that diligent about making sure that, we're taking care of our team members, then we can take care of our guests.
Hey, talk to us, if you could, Darren, about the mix, because from my understanding is before the pandemic, I think drive-through was about 70% of your sales. Dine-in and takeout delivery was about 15% apiece. So give me an idea of how that changed. What's the update during the pandemic?
Yeah, during the pandemic, about 99% of our business is off-premise.
Okay.
And so substantial change. We were already heavily off-premise, but during this time, it switched pretty dramatically.
And I just want to make sure I'm understanding the verbiage here. When you say off-premise, you mean drive-through, but also is it walk-up too?
It's also delivery. Yeah, it's walk-up, delivery, and drive-through.
How have you figured out delivery? What's the right way to do it? A lot of restaurants are struggling with this right now.
For us, it's about making sure that we engage our guests. We give them opportunities to order in the way that they want to order versus online through our app or through the third-party major delivery providers. So we give them access to do that in many different ways and try to make it as frictionless as possible.
But you would rather have them order through your app if you had your druthers, right?
Obviously through our app, it continues to enable us to build a database that we can constantly communicate to our guests and create a one-on-one relationship. So yes, we would always enjoy, having people engage in our app and really focus on being a brand loyalist.
But does it reduce the commission that you have to pay third parties in order to deliver the actual food?
It's good for it's good for the guests, and it's good for us as well from a margin standpoint, because it is a lower cost.
So I'm curious, Darren, like a lot of businesses, and I think about this especially with groceries, like people who didn't order online groceries before all of a sudden had to do it because of the pandemic, and now they're a customer. So how do you plan to keep maybe some of the newer, higher income customers that you've been able to gain during the stay-at-home orders and restaurant dining room closures? How do you hold on to them when all of a sudden the world opens up and there's lots of choices?
Yeah. During the pandemic and early on in my tenure, we did a lot of work around understanding our guests, why they come to us, why they leave. And so we've been very focused on making sure, we're providing them the offers that they want. So as an example, we've had the benefit of more premium items during the pandemic that have resonated with our higher income guests. And so it's driven incremental sales through really some snackable and craveable items like our tiny tacos, our sauced and loaded fries, and then the innovation with our new chicken line. And all of those have raised our system-wide sales and AUVs.
Let's talk chicken.
What's AUVs?
Oh, go ahead. And then we'll talk chicken.
Sorry, yeah. Annual unit volume.
Okay, cool.
Average unit volume.
Sorry.
Can we talk chicken now?
Because I'm hungry.
We've seen a huge resurgence in chicken, especially when it comes to chicken sandwiches. How are you guys partaking in the chicken sandwich wars?
Yeah, so we're leaning all in, and for us, chicken has been a strong performer. In the middle of the pandemic, we'll continue to innovate. We rolled out our cluck chicken sandwich, and we'll continue to look at ways to connect with guests through chicken. We found that chicken is less price sensitive, and it also allows us to create different flavor profiles that really fit the Jack in the Box DNA, which is one of innovation.
So sit tight for a second. We want to come back. We've got to do a little bit of news, Darren, but love to talk more and also just about kind of the changing tastes and demands of consumers as we see kind of food evolving too. We've certainly seen that not just in the past year, but really over the past couple of years. We're going to come back to Darren Harris, CEO of Jack in the Box, joining us on the phone. I got to say, I'm a little bit hungry.
Yeah, I am too. That's why I asked about chicken. Also interested to hear about franchisees and how they're thinking differently about franchisees and supporting them through the pandemic as well.
Yeah, I want to ask them too about their exposure to California and see how that maybe has helped them during the pandemic, especially with the shutdown that we've seen over the past year there. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. We're going to get back to our guest, Darren Harris, CEO over Jack in the Box, talking about their business. And I want to talk a little bit more about franchisees, also the outlook, what kind of visibility they've got going.
Yeah, really interested in how the company is thinking about supporting franchisees who had to transition so quickly into this off-premise business, right? Delivery and, of course, drive-thrus.
Right. Really quickly. All right, we'll get back to him in just a moment. Let's right now, though, get back to Doug Krisner with a check on the world of business. Hey, Doug.
Hey, Carol, I'm looking at the numbers on Chewy after the bell, and the question occurred to me, how have the numbers on pet ownership changed as a result of the pandemic? You look at the numbers here, you would have to kind of come to the conclusion that people have more pets now. Chewy swung to a fourth quarter profit, more than $2 billion in sales, and at the same time, the company's forecast for first quarter net sales beat estimates. Shares are up about 10% right now in after-hours trading. There is also Lululemon after the bell with a forecast for first quarter net revenue that was above estimates, but that stock is down, let's call it less than 1% right now. We had weakness in the overall equity market today. A little bit of debate here on the consequence of more fiscal stimulus. President Biden tomorrow is expected to unveil a spending plan worth some $2.25 trillion, targeting jobs and infrastructure. So in the small cap arena, the Russell 2000 rallied by 1.7%. However, the Dow was down from a record high today by about 0.3%. Similar decline for the S&P 500. And in the NASDAQ market, composite index down just 0.1%. Long-term interest rates moved up. We got as high in yield terms as 177, but we closed to around just under 172 at the end of New York trading. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. We want to get back to our guest, Darren Harris, Chief Executive Officer of Jack in the Box, still with us here on Bloomberg Business Week. And so, hey, one of the things I wanted to ask you, Darren, outlook, visibility, what does the economy look like in your view?
You know, from this standpoint, definitely we're seeing, you know, as we start to come back or lap the pandemic, we're seeing, you know, performance across all geographies. We're starting to see, you know, people come back into our restaurants and frequent them, and we're excited about that, what that may mean for the future.
I want to talk a little bit about franchises and franchisees. And look, full disclosure, I come from a franchisee family. That's what my dad did. He was a Taco Bell franchisee. No longer involved in that, but it was something that I got to see up close and personal. And in fact, my first job was there when I was 14. So I got to work fast food and really see it from that perspective. How are you thinking about franchisees right now? Like, what were you doing? What was Jack in the Box doing a year ago to support the thousands of stores that are franchisees during the pandemic and to help them transition to this off-premise business?
Yeah, so overall, it's, you know, we're always looking at how we provide a comprehensive support system, whether it's, you know, with design and construction to make sure that they can maintain a safe environment as they engage the guests in the pandemic, or, you know, with training or marketing. We're also constantly in R&D, like I mentioned, rolling out new products during the pandemic to ensure that franchisees are provided the menu and systems that will enable them to, you know, engage customers and maintain the latest trends.
What about when it comes to, I mean, I have to imagine that right in March and April, as you were seeing this play out around the country and there were lockdowns, what were the challenges that franchisees faced when it came to real estate and making sure that they could actually pay those landlords? Did you have to adjust any franchise fees? Did you have to work with them at all?
We did. We came in, and fortunately, you know, early on we started to, you know, continue, or early on we performed during the pandemic. But we did offer to our franchisees, any of them that had challenges, reduced royalties or deferred royalties and rents. And ultimately, all of our franchisees have paid those back during the pandemic.
So it's been okay?
It's been okay.
So one of the things I wanted to ask you, did you?
Yeah, go ahead.
Okay. We're both
I'm like staring at Carol thinking about chicken sandwiches.
A million questions for you, Darren. I was talking to our Bloomberg Intelligence team, Mike Halen, who covers the restaurant space, and he was curious too about how much of a sales boost you've received from your elevated exposure to California, where we know there have been aggressive dining room closures and helping restaurants like yourself and drive-through sales. Can you talk to us a little bit about that?
Yeah, what I would say is, we've had similar performance across all geographies during the pandemic. And so whether it was California or Texas or, other markets that we have, we're in 21 markets around the country.
But you have big exposure in California, right?
We do. It's a substantial portion of our geography.
Mm-hmm.
But we've seen performance across all geographies. And, our last quarter and quarter one of this year, we increased 12.5% on our same-store sales.
Wow.
So you're not concerned about something like California, disproportionately helping you guys because of the shutdown there? I mean, you have large exposure, massive, shutdown that we've seen in California, that as things start to reopen, that could hurt you on the other side, could become a headwind.
Yeah, even in our reported quarterly results in Q1, we've said that we've performed across all geographies, and in markets like Texas, where we've seen them opening up sooner,
mm-hmm.
we've had similar performance across all the geographies. And I believe some of that's, like I said, is we're doing the right things to connect with our guests. It's resonating, but also things like our mobile app and digital sales have doubled year over year to nearly 7% of sales, and so we think all those are core momentum drivers that are just going to continue, pandemic or not.
Hey, one of our loyal listeners has said, okay, what about plant-based burgers? I mean, food choices for people are changing, right? And I do wonder how you are thinking about that. And we've got about a minute left.
Yeah, we're always looking for opportunities to connect with our guests through innovative products. So we'll be testing a plant-based burger. We also, during the pandemic, tested...
Is that news? Did you just break news with us?
No, we did not.
Darn.
We've always, we did roll out during the pandemic the unchickened chicken sandwich.
Hey, I want to just ask very briefly, and we only have a few seconds left, about the labor market. You took this job in June of 2020. If we would have talked 18 months ago, I think you would have said that the labor market is a challenge. Is it still a challenge for your franchisees to find employees?
It is. It's definitely a challenge. It's even more challenging. And what's interesting is during the pandemic, especially with the stimulus package, we often see employees who take the cash and pocket it and go enjoy a week off. And that always creates a challenge. So we've done everything we can to give our restaurants a competitive edge, whether it's new training programs, new equipment, an environment that's refreshed so that employees want to work with us. And then also just the tools to help serve our franchisees well so they can focus on really attracting and getting employees who want to serve our guests better.
Darren, thank you so much. Really appreciate this conversation, all the time you gave us. Darren Harris, he's the Chief Executive Officer of Jack in the Box, joining us on the phone on this Tuesday. I do wonder about labor for a lot of these folks as the economy start to open up, where there's going to be a little bit of a scramble.
Yeah, and if they're going to have to start offering more money to employees in order to entice them to retain and attract talent.
Which were some of the stories we were hearing kind of pre-pandemic.
Exactly.
All right, let's get to world and national news. Back on over to Nancy Lyons. She is in our D.C. bureau. Hey, Nance.
Hey, Carol, it has been another day of witness testimony in the George Floyd murder trial. Eyewitness Donald Williams was asked by prosecutor Matthew Frank why he called police after seeing Officer Derek Chauvin put his knee on Floyd's neck.
At some point, did you make a 911 call?
That is correct. I did call the police on the police.
All right. And why did you do that?
Because I believe I witnessed a murder.
And so you felt a need to call the police?
Yeah, I felt the need to call the police on the police.
Williams happens to be a trained MMA fighter. Defense attorneys say Chauvin was doing what he was trained to do. He's charged with second-degree murder, third-degree murder, and second-degree manslaughter. Well, hundreds of mourners have been remembering the Boulder police officer killed last week during a mass shooting at a King Soopers grocery store. During Officer Eric Talley's funeral today, Boulder Police Chief Maris Harold spoke directly to his family, saying he gave up his life to save others.
Your father died a hero. There is no doubt, because of his bravery and quick action. Dozens of innocent lives were saved.
Harold says Officer Talley leaves a legacy of compassion. More than 500 law enforcement vehicles took part in a procession that escorted the hearse carrying Officer Talley's body. Are you ready for some more football? NFL team owners are increasing the season for the first time in 33 years, approving a 17-game regular season. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So, story that caught Tim and my attention. Bank of America saying that the 1,800 new graduates it's hiring will be trained online, but they are likely to work in offices.
Hey, those new graduates are probably pretty excited about this.
Yeah,
given that
I
their
would say
peers
so.
last year. You know, I talked to some college students last year who were doing internships, and the parents of those college students too, and they were just, kind of like doing Zoom stuff in their bedrooms during the whole summer. It's a real missed opportunity.
Right, not exactly the internship experience that you were thinking. So they say virtual training and orientation, including any licensing needing, will begin in July for the bank's campus hires, with the aim of having new employees at offices come October. They put this out today.
Imagine this, you're one of the new graduates from last year, okay?
Yeah.
Talking, you graduated in 2020. You started working somewhere.
I'm excited.
Yeah, you're excited. You still haven't met so many of your colleagues. Look, I'm speaking from personal experience here. I'm not a new graduate. I'm very far from being a new graduate, but I started this job a little, 6-7 months ago.
Right.
And there are so many people who I only know over video chat right now.
Yeah, which is really weird, because especially so many corporate environments, I know our environment, that's just running into people and it's kind of nonstop, frenetic activity constantly.
Yeah, that's what I like about it.
Yeah.
I'm excited for people to get back, Carol, and I think that probably new graduates are as well.
Well, what's interesting, too, about this is that they're saying, okay, so maybe the training is going to be done online, but they will ultimately work in offices. So lots of stories, and we've seen increasingly when it comes to Wall Street banks and the financial firms that we're increasingly seeing what feels like, the heads of these companies saying, come on, we're going to bring everybody back. That's what we want.
So the firm wrote an email to new hires, and it wrote, quote, "Our goal is for you to be able to do this in your assigned office location in October, working alongside Bank of America teammates and colleagues. We will notify you of our final plans well in advance and provide at least 1 week for you to relocate as needed."
At JP Morgan Chase, hundreds of interns are set to work at the lender's New York and London offices. That's going to be in the coming months. Citigroup will begin inviting more workers back to its offices in July. Goldman telling its incoming class of summer interns they'll be able to work from the company's offices. Done.
Sounds good.
Citi's going to be busier. I can feel it. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We had some earnings news after the bell. We'll begin with Chewy. The company swung into a fourth quarter profit, more than $2 billion in sales, the driver there. And at the same time, Chewy's forecast for net sales in Q1 was above estimates. Right now, those shares heavily traded in the late U.S. session, up by nearly 10%. We also heard from Lululemon. The company gave a forecast for first quarter net revenue that was above estimates. Even so, the stock is down about 1% right now. Overall, in the equity market today, a lot of weakness with the exception of the small cap arena. We had the Russell 2000 today picking up more than 1.7%. But if you're looking for the major benchmarks, the Dow down from a record high by 0.3%. We had a similar decline in the broader market for the S&P 500 and the NASDAQ comp off just 0.1%. Through the day, it seemed like the market was really grappling with the consequences of more fiscal stimulus. We're going to hear from President Biden tomorrow. We are told he will unveil a plan to spend about $2.25 trillion on jobs and infrastructure. 10-year Treasury up a little bit in yield today, but well off the yield high. We were at 177 at one point in New York trading. We closed just under 1.71%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, got it. Appreciate that. Doug Krisner there. All right, so we have been talking a lot about how work is shifting, the stresses on employees and the leaders ahead of our Bloomberg Live virtual event on the subject. That's happening tomorrow. So we've got a perfect guest that fits into all of this. Paula Davis is founder and CEO of the Stress and Resilience Institute, author of the book, Beating Burnout at Work, Why Teams Hold the Secret to Wellbeing and Resilience. And she joins us on the team from Milwaukee. I've just got to say, Tim, I feel like this is so timely.
It is so timely. We're over a year into working from home at this point, and I think a lot of people are feeling the B word, which of course is burnout.
Burnout, indeed. All right, so Paula, come on in. Welcome. How are you? And what's your stress level been like over the past year?
So thank you so much for having me, first of all. So I'm just, trying to pivot my business on a dime and write a book during a pandemic. And I have an almost 5-year-old, and so I feel like I'm sort of in the thick of it with everybody.
Yeah, so easy, right? Everything's been easy.
Totally.
Yeah.
It's been great.
Kate, can you give us very briefly, talk a little bit about how you had a burnout earlier in your career and how it led you to think differently about what you wanted to be doing?
100%. So I practiced law for 7 years and burned out during what became the last year of my law practice. And so I did not know what it was. I felt like it was something that sort of crept up on me. Once I was really in it, I knew something was wrong or off, and I didn't really know how to address it or get myself out of it. And there were some warning signs that I missed kind of going through that process that I didn't realize were warning signs until after the fact. So it was a year-long process that ended in a not-so-great way. I was having panic attacks, and I was in the emergency room a couple of times from the stress that I was experiencing. And that really caused me to take a step back and rethink what I wanted to be doing with my career. And so that I said, why not make my mess my message, and sort of turned and found the Applied Positive Psychology program at University of Pennsylvania. So I thought, why not study all the factors that lead up to this so that I can steer organizations and leaders and people away from this.
Hey, Paula, give us some of the warning signs that you know now but didn't know at the time.
Yeah, so there were 3 big ones. And as I realized, these are actually the 3 big dimensions of burnout. So this is also how you know if what you're experiencing is starting to move away from stress and into something like burnout. So the first one was chronic physical and emotional exhaustion. So we all have tired days and weeks and things like that, but this was over a period of time. Nothing that I did felt like I could, kind of refuel my tank. So there was that one. And the second big warning sign is chronic cynicism. So everyone just started to bug me and annoy me, and especially my clients, which is a bad thing to have happen. Outwardly, I was always very professional, but inwardly, there was a lot of eye rolling going on.
Is that stress or just being a New Yorker? I'm just going to say from my own perspective.
Yeah,
I'm kidding.
New Yorker asking here.
I'm kidding. Well, What's interesting about, and our producer Paul Brennan said to me, all right, Carol, you're not going to like this, but she said one of the things is you can't yoga retreat your way out of stress. I'm a big yoga person, and I've gone on retreats. I mean, the whole kind of message is try not to get to the point where you're stressed and burnt out, right? That it's not about treating that, it's trying to prevent getting there.
Yeah, it is also recognizing that we've been really kind of talking about burnout in the wrong way for a long period of time. We've been focused on talking about it as solely kind of an individual problem that requires individual strategies to fix it, when in reality, there's certainly things about our personalities and our resilience levels and things that influence whether we'll burn out. But the bigger picture is looking at the rest of the organizational system, right? It's also the teams that we're part of and the leaders that we have and the organizational culture and environment, and that's really the bigger piece of the puzzle. So we have to start kind of adding to the conversation. So we're expanding from not just the individual approach, but really looking at the whole entire system and what we can do.
But is this leaders? I understand everybody has to look at it, but listen, I can certainly say as a worker bee, here's our problem or here's my problem, but, isn't it up to the folks at the top to kind of set the tone? Walk the walk, walk the talk.
It's a huge piece of the puzzle, and I talk about in the book that organizations that have been successful at really kind of rolling out more of this systemic approach had leader buy-in, but it was huge, right? And so that's a lot of where I like to start my work is at the leader level, and it's not just leaders at the top; it's really leaders at all levels. Who have a responsibility to really understand the deeper causes of burnout and recognize what's at play within their own teams and spheres of influence.
So what's the right way for us to be thinking about this? Well, so many of us are working from home and don't necessarily have that separation between work and life, like rolling out of bed and then your desk is right there and you just get on that Zoom call and you're doing that until you realize that it's 6 p.m.
Yes, and then we continue to work after we get dinner ready and things like that. So that's been a really difficult challenge, and the kind of the little formula that I've been giving people is that we know burnout is more likely to happen when our demands outpace our resources. So when there's an imbalance between our demands and resources. And the hard part, I think, about the environment we've been in is that we've already had lots of demands with our work, and now we have more because of the pandemic and other things, right? So we have fewer resources. So our friendships and the things that we would normally do to kind of blow off steam, the gyms are functioning differently and we're closed for a period of time. Those resources that we would normally take advantage of to help us deal with the stress in a different way or in a better way have been foreclosed. And so I think that's a challenge for a lot of people. We've got more demands and fewer resources. And so to me, that's part of understanding why I think a lot of folks are feeling like they're feeling. And yeah.
Paula, just got about a minute left here, maybe a little bit less here. An actionable item if you're a leader or an individual.
So if you're an individual, one of the things that I talk about in the book is the 20% rule. So thinking about what are some of the most meaningful aspects of your work and trying to build in spending up to about 20% of your time working on those things that you find most meaningful. So you might have to start your day a little differently or end your day a little differently, but just really trying to build in more of those moments. And then for leaders, really, I would say starting with building psychological safety, which is trust within your team, and it can be done as simply as being accessible and approachable, making sure you're hearing from everybody in meetings, so it's not just the same person talking all the time.
Right.
And really small you matter cues, so checking in on people and asking how they're doing can really go a long way.
Right. Somebody said we need chief empathy officers.
I like
at
that.
Companies. Don't you too? It's just like a place you can go and just kind of talk about everything and anything. Paula, thank you so much. Be well, stay safe. I really appreciate it. Paula Davis, founder and CEO of the Stress and Resilience Institute, author of the book Beating Burnout at Work, Why Teens Hold the Secret to Well-Being and Resilience.
But don't worry, Carol, yoga still helps. Okay?
I'm still going on my retreats.
You can still go on your retreats once you're fully vaccinated.
Maybe because there's some margaritas involved occasionally. It's all about the classes. I have a great yoga teacher. All right, for Tim Stanovic and our whole Bloomberg Business Week team, have a great and safe evening, everyone. I'm Carol Massar, and this is Bloomberg.